Hi, I'm an investor from South Korea, and today I'm gonna introduce you guys IONQ, the company that's developing quantum computers. First, I'll tell you a short history of IONQ. Professor Christopher Monroe from the University of Maryland and Professor Jung-Sang Kim from Duke University conducted joint research supported by the US DARPA. In 2013, they published a paper titled Scaling the Ion Trap Quantum Processor. Building on this research, in 2015, they co-founded IONQ. In 2017, IONQ received investment from Google Ventures and in 2019 from Samsung Electronics, allowing the company to focus more intensively on research and development. Then, IONQ formed partnerships with Microsoft Azure, Amazon Web Services, and Google Cloud to launch cloud-based quantum computing services. In 2021, IONQ was listed on the New York Stock Exchange, becoming the world's first pure-play quantum computing company under the ticker IONQ. In 2024, IONQ established the first quantum computing manufacturing facility in the United States, located near Seattle, Washington. Let me summarize IONQ's business in one sentence. IONQ is a quantum computing platform company that develops and commercializes trapped ion quantum computers, providing quantum computing as a service through AWS, Microsoft Azure, and Google Cloud. IONQ's current CEO is Niccolo De Masi, a US-based executive in his mid-40s. He earned both his bachelor's and master's degrees in physics from the University of Cambridge in the UK. Throughout his career, he has served on the boards of 14 companies and held the CEO position at 6 of them. Most recently, he served as a board member at Planet Labs, a US-listed company. He joined IONQ's board of directors in 2021, and in February 2025, he was appointed as CEO, a role he continues to hold today. Let's move on to introducing IONQ's quantum computers. Starting with Harmony, IONQ's first quantum computer released in 2019, followed by Area in 2021, Forte in 2023, and Forte Enterprise in 2024. A more advanced model, Tempo, is scheduled to be launched later this year. IONQ's goal for this year was to achieve 64 algorithmic qubits. Just a month ago, in September, the company announced that Tempo had successfully reached this milestone. Okay, so what is an algorithmic qubit? Qubits are categorized slightly differently depending on their performance. First, physical qubits refer to qubits that are implemented in actual hardware. Next, logical qubits are high-quality virtual qubits created by grouping multiple physical qubits together so that they can automatically correct errors. Finally, algorithmic qubits are a performance metric unique to IONQ, representing the number of stable and accurate qubits capable of performing useful computations, a way to quantify the system's practical computational power. With the concept of qubits in mind, let's take a look at IONQ's next-generation quantum computing technology roadmap. In 2025, IONQ has already achieved 100 physical qubits. By 2026, the company aims to reach 256 physical qubits and 12 logical qubits. Their 2027 goal is to achieve 10,000 physical qubits and 800 logical qubits. And by 2030, they plan to realize 2 million physical qubits and 80,000 logical qubits. The logical error rate, currently around 10 to the minus 7, is projected to drop to 10 to the minus 12 by 2029. Once this level of precision is reached, the development of highly reliable, commercially viable quantum computers will become possible. If you stop watching here, you've only seen half of what IONQ is really about. IONQ has been emphasizing the need and importance of quantum networking for several years. Here is IONQ's proposed roadmap for quantum networking. IONQ has outlined 4 key milestones for this initiative, and they have already achieved the first and second stages last year. To fully understand this, we first need to grasp the concept of quantum entanglement. Quantum entanglement refers to a quantum mechanical phenomenon in which two particles remain connected so that the state of one particle conditionally affects the state of the other, even when they are separated by a great distance. IONQ's quantum networking is implemented through a technology called photonic interconnects. This technique uses particles of light, or photons, to connect and entangle different qubits with each other. First milestone in photonic interconnect is ion-photon entanglement. Second milestone is about photon-mediated ion-to-ion entanglement. Third milestone is about swapping ion-to-ion entanglement between the two QPUs. Fourth, and the last milestone is about programmatic entanglement in multiple QPUs. IONQ takes NVIDIA as its role model. NVIDIA designed high-performance GPUs such as the H100, and by acquiring Mellanox, it secured InfiniBand GPU networking technology. With its advanced GPUs and superior networking capabilities, NVIDIA has maximized the computing power of data centers. Now, let's apply this framework to IONQ. IONQ has developed its own trapped ion QPUs and acquired a company called LightSync to advance its photonic interconnect technology. By combining cutting-edge quantum computers with quantum networking technology, IONQ aims to build a scalable quantum computing infrastructure that extends beyond individual machines to full data center scale. IONQ's ultimate goal is to build a global secure communication network that connects quantum data centers around the world. In other words, a quantum internet. No matter how much hardware and software advance, without progress in real-world use cases, those advancements would be meaningless. IONQ is currently collaborating with global partners in areas such as power grid optimization, drug discovery, engineering design simulation, data analysis, and supply chain optimization. This is IONQ's quantum application roadmap. As the number of physical and logical qubits increases, you can see the range of applicable use cases expanding accordingly. If IONQ succeeds in achieving its goal of 2 million physical qubits and 80,000 logical qubits by 2030, the company predicts that quantum advantage will begin to emerge across multiple industries. Quantum advantage refers to the point where quantum computers can solve problems that classical computers cannot. The question is, by 2030, will quantum computers truly be capable of training robotic AI models, optimizing the behavior planning of AI agents, and performing polymorph screening in drug discovery? IONQ's revenue structure is composed of three main pillars. First, the hardware revenue. This comes from the manufacture and sale of quantum computers and quantum networking equipment. Second, quantum computing as a service. Based on AWS, Azure, and Google Cloud, this model allows customers to remotely access IONQ's quantum computers through a subscription-based cloud platform. Third, consulting revenue. This includes co-development of quantum algorithms with other companies, where IONQ recognizes revenue as specific project milestones are achieved. For Q2 2025, IONQ's hardware revenue doubled year over year, accounting for about 70% of total revenue. Let's take a look at IONQ's quarterly performance trends. Over the past 5 years, the company's revenue has been steadily increasing, but at the same time, its operating losses have also continued to grow. As of October 23, 2025, IONQ's stock price stands at $55, having more than tripled over the past year. The company's current market cap is approximately $20 billion. What is IONQ's target price according to analysts? Currently, 9 analysts cover the stock, 6 have issued buy ratings, and 3 have given hold ratings. The average target price stands at $64. And the most recent update, on September 22, saw one firm raise its target from $75 to $100. Who are IONQ's major shareholders? Institutional investors hold about 40% of the company's float. More specifically, as of March filings, Vanguard owns 8.7% and BlackRock holds 6.2% of the shares. By June, Morgan Stanley had also increased its position to 6.8%. Among insiders, former CEO Peter Chapman holds 2.7% while current CEO Niccolo De Masi owns approximately 1.1% of the company. In June of this year, CEO Niccolo De Masi sold 2.6 million shares at an average price of $40 per share. Afterwards, he received stock-based compensation, and he currently holds 1.18 million shares, representing approximately 0.4% ownership of the company. Let's take a look at IONQ's Q2 2025 earnings report together. This is the income statement for Q2. Total revenue reached $20 million, representing 82% year-over-year growth. Hardware sales increased by 92%, driving the overall revenue growth. However, the company spent $100 million on R&D, which is 5 times its revenue. As a result, operating loss amounted to $160 million, more than tripling from the same period last year. Net loss came to $180 million, marking a more than fourfold increase year-over-year. This is the balance sheet for the first half of 2025. Total assets amounted to $1.35 billion, with current assets of $630 million. Assets more than doubled over the past 6 months, mainly due to increased goodwill and intangible assets following several acquisitions during the period. Total liabilities stood at $170 million, of which $80 million were current liabilities. Shareholders' equity was $1.16 billion. The current ratio was 776%, and the debt-to-equity ratio was 14%, indicating a very strong financial position. This is the cash flow statement for the first half of 2025. Operating activities resulted in a net outflow of $90 million, mainly due to a net loss of $200 million. Investing activities showed a net outflow of $200 million, largely driven by over $400 million invested in short-term financial instruments. Financing activities recorded a net inflow of $370 million, primarily from approximately $360 million raised through an ATM equity offering. Net cash flow was positive $90 million, and cash equivalents stood at $140 million at the end of the half-year period. IONQ raised its revenue guidance for the third quarter and full year 2025. For the third quarter, the company expects revenue between $25 to $29 million, representing 21 to 40% sequential growth from the previous quarter. For the full year 2025, IONQ projects revenue between $82 to $100 million, reflecting 90 to 132% year-over-year growth. However, following the acquisition of Oxford Ionics, expenses are expected to rise, and adjusted EBITDA loss for 2025 is forecasted to increase by 30% to approximately $211 million. Finally, I have summarized the investment highlights and risks. The first investment highlight is that the era of quantum computing is approaching. It has already been 60 years since Richard Feynman first proposed the concept of the quantum computer in the 1960s. The United States and China are engaging in nation-level investments to secure quantum supremacy. Since passing the National Quantum Initiative Act in 2018, the US government has pledged over $3 billion in the funding. Meanwhile, China launched the world's first quantum communication satellite, MISSIS, in 2016, and in 2021, through its 14th five-year plan, announced over $15 billion in planned investments for quantum technology. Historically, global power struggles have often served as catalysts for technological revolutions. While the exact timing may vary, the age of quantum computing is inevitable. As a leading US quantum computing company, IONQ stands poised to benefit from this paradigm shift. The second investment highlight is that IONQ is a company that keeps its promises. The chart shows IONQ's quantum computing technology roadmap over the past 4 years. Notably, the company achieved its targets ahead of schedule each year by 2 months, 7 months, 12 months, and 3 months, respectively. IONQ continues to present a clear annual roadmap and is now looking ahead to 2030. The company aims to increase qubit count, reduce logical error rates, and advance quantum networking technologies. asserting that quantum computing will soon be capable of solving complex industrial problems once thought unsolvable. While past success does not guarantee future performance, a company that has consistently delivered on its promises is, in my view, more likely to keep its future commitments as well. On the other hand, I have also considered the investment risks. At the beginning of this year, NVIDIA CEO Jensen Huang stated that a truly useful quantum computer is still at least 20 years away. Although Jensen Huang later apologized, admitting that his earlier statement was wrong, and hosted Quantum Day at GTC 2025 to promote quantum computing innovation, following his remarks, shares of IONQ and many other quantum computing companies plunged more than 40% in a single day. This demonstrates how immature the market still is and how limited investors' understanding of quantum computing remains. In other words, these stocks are still closer to meme stocks, fueled by dreams rather than fundamentals. The second investment risk is the $2 billion equity offering announced 2 weeks ago. In detail, the company issued 16.5 million shares of common stock at $93 per share, along with 5 million pre-funded warrants, also priced at $93 per share, together amounting to about $2 billion. Additionally, the deal includes warrants, allowing the purchase of 43 million more shares at $155 per share within 7 years. Through this equity offering, the company has been able to strengthen its R&D efforts and make its roadmap goals more tangible, but shareholders will inevitably face short-term dilution. A total of 21.5 million new shares have been issued, and if potential warrants are exercised, up to 64.5 million additional shares could enter the market. Given that there were 300 million shares outstanding as of late July, this represents an immediate dilution of about 7% and up to 18% when including the warrants. Now, this concludes my analysis of IONQ. I'll see you again on November 5th when the company releases its Q3 earnings report. If you found this video helpful, please subscribe, like, and leave a comment. Thank you.